this trade? Are you taking a sell or are you taking a buy?
Buy.
Right. Now, why would we take those trades?
Because the
Why
higher
would we not take a
probability.
sell when the momentum... Yep.
It's clean and it failed to break previously.
Okay, regardless if it's clean, this is a clean structure, but regardless if it's clean, if the market in the past has illustrated that it's failing to break below structure and we get wick rejections here, let's not get technical, let's keep it simple. And there are strong signs of price trying to break that structure low, and we see strong rejection wicks to the bottom. Where is our money best placed? On a sell or a buy? Clearly a buy, but why? Because that's what makes sense. If the market was going to break it after 3 hours and there's wick rejections and it doesn't break it, then our money is best on buys if we had to. If we had a gun to our head and we were told to take a trade. Now, let's move on to the next question. Does this trade need to win?
No.
No?
No.
Do we know for a fact that this trade is going to win?
No.
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 We have a gun, right, but we have a gun to our head and we are told we must take a trade. If the wicks are there, we take a buy. Because if our life depended on it, that's what makes sense. So when we start to scale down or look at the top charts and start to identify lower highs within this structure and we start to be smart, but the wick rejections are here and it looks like a buy, if we had two choices, the choice would be to buy because the wick rejections are here. If the market starts to break this structure and this is a breakout and we had our stop loss above this level and this stop loss for this selling opportunity was 120 pips and you had a gun to your head and someone said you must take a sell or a buy, are you going to start to now reason that Rock said wait for a retracement back to 50% or wait for the pullback retest for 2 wick rejections before you sell? Or are you going to slam sells on this straight away?
Selling.
You're going to sell the market because it's what makes sense. If the market breaks a structure and it hasn't broken it for a long period of time, then you accept the risk on this trade with a stop loss above the structure and you sell the market because the market has indicated strong bearish pressure. Now, does that mean that the market may not break back in? Well, it could.
No.
Does that mean that the market may retrace 50%? Well, it may. Does that mean the market may not retrace back to a retest? Well, it may. Or may it stop you out? Well, it may. But the question is, where is your money best? Would you be buying here because now you want to be smart and say to yourself, well, this is overextended, it's time to now look for a retracement? Or would you say now it's time to just sell the market because that's what the market's indicating? We just need to keep it simple. Now, don't forget about the concepts that I've taught you about, but understand the concept here that I'm trying to illustrate. Simple. Okay? If the market... Stay muted, guys, if you're going to be making noise in the background, please. If the market does 3 things, moves up, down, and sideways, then we need to start to respect that. So if it's moving up, we buy. If it's down itself, it's ranging, we let it go. Okay, unless you want to. All right, last time. Who is it, guys? If the market is moving up, we buy. If it's moving down, we sell. If it's ranging, then we let it go unless you want to. But if the market starts to indicate it's breaking a key level in the market after a long period of time, then we should start to think about buying opportunities. Maybe not straight away, but it might be wise to. And if it's breaking the structural lows and start to indicate strong bearish pressure, then it may be wise to look for sells when given the time, when the market gives us the right opportunity. Okay, we need to keep it simple. Now let's move into some of the concepts here. What should we expect? Well, when the market is moving in an uptrend, the market will make a new higher high. Now, I've just illustrated a gun to your head and you take buys or sell. But on the same token, I also said to you that if the market is moving up or down and you plan to buy or sell, does it need to win? Majority of you said no. But if the market is in an uptrend, then technically, what is it going to do? It's going to make a higher high. We have to accept that concept. It will make a higher high. Does it have to? And will it always? No. But if it is in an uptrend, it will make a higher high. If the market is in a downtrend, and we know that a downtrend makes lower highs and then eventually a lower low, then guess what? Eventually the market will make a new low. Does it have to? No. Do we know when it's going to do it? No. Could we take sales for 10 days in a row and lose all trades before it goes down? Absolutely. But the truth is the market will make a new low. And if the market is ranging, then we just need to wait for the market to break out and find a direction. So with that in mind, let's move on to understanding this. If the market makes higher highs and higher lows, then eventually the market will make a new higher high. Now, the higher low formations are going to come in many different formations. Now, I'm not going to go into all of those. I'll go into a couple of key principles here that we need to look out for. But the truth of the matter is, if the market is moving up and we see the market right now pulling back, just because we see this pullback, should we be looking for buys or sells? Well, the majority of you are going to say buys, right? And I'm hoping that you do, regardless of whether this is on a daily time frame, weekly time frame, 5-minute, 15-minute, or 30-minute time frame. The overall structure here is telling us what? The market is moving up. So if we decide to take this trade and this market's going to move up and we buy here, we buy here, 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 and wherever we buy, whatever we do, we don't place a stop loss, or we place our stop loss down here and we go for a one-to-one target. Eventually, if the market's going to go up to make that higher high, guess what? We're going to make money. It's not how we trade. We're not loose traders, because that's obviously why we use patterns and everything else. But the theory is, if the market's moved up, it's going to go up. Now, if the market comes down and stops us out, as long as we take these trades over and over again for a very long period of time, or for however long we need to be in these trades, then guess what's going to happen? We're going to win and we're going to come out on top. Now, if the market is moving to the downside, then what's the market going to do? The market eventually is going to make a new lower low. Now, again, even if we sell at the perfect level for the lower high, down here, down here, down here, down here, down here, down here, or even the breakout, eventually, wherever we sell, the market will make a lower low. Now, does it need to make that lower low? Nope. It may pop back up and go to the upside. But as long as we're selling when the market is down, we know that this lower low is going to be made. We're going to make money in the long run. Now, back to my example, and it's not just an example. I actually couldn't have made this up, to be honest with you. But me trading the 1 minute time frame, I was able to take so many trades in such a short period of time. Don't get me wrong, it wasn't within an hour. It was a good, in total, I'd say a good 6-7 hours invested trading the 1 minute time frame. But every time I took a trade, I was just so confident in taking that trade and placing my stop loss just above the high, because even if I got stopped out, what I knew that if the market decided to stop me out, the structure was violated and I will have another opportunity within the next 30, 40 minutes to take a buy if it's going to go up. And I learned so much in such a short space of time to accept that the market moves the way it does, that it was just unbelievable. But again, back to the concept, if the market is making lower highs and lower lows, what is the only reason why we're going to find this difficult to wait for this or these trades to happen? Reason. I'll pause the recording. Sorry, let me ask you a question again. What do you think is the biggest factor that's going to make it very difficult for us to take these trades and accept the result if we get stopped out or we win?
Patience.
Patience. Guys and ladies, I'll be so real with you. That is all it is. Honest to God, hand on my heart. Trust me when I say this to you. Trust me when I say this to you. I've been trading for a very long period of time, and I have just really accepted this recently. The only reason I can see why traders are failing the most is because they are not getting the results they want in the space of time that they expect to get them. And the biggest reason why so many traders in our community have gone down to the 5 minutes is because they can see people who are banging out trades in 15 minutes. The reason why traders are trading the higher time frames now or start moving back up is because they can't deal with losing as quickly as they do or being stopped out as quickly as they do. But then what's the problem with traders trading the higher time frames? Well, then you have to deal with sitting in a trade for a very long period of time, hours, days, weeks, to then be stopped out at break even, to then have to deal with those results. But when you really check it, what is trading all about? If we're buying in an uptrend, selling in a downtrend, waiting for structure to pull back to give us the best opportunity to sell or buy, what is trading all about? Ultimately,
Operating in the now.
correct? In the now, and then in terms of the results, are we expecting the results now, or when should we expect the results?
When they come.
When they come. And that's it. Now, I just hope everybody listens to the first part of this before I start moving on to some of the technical stuff more than anything else, because in my opinion, this is the most important part of this session. Now, I know 80-90% of you have come here for the secret sauce, but I'm telling you now for a fact, if you cannot accept this concept and these principles about trading, you are screwed. Screwed. Because the point is, most traders and most successful people do not have a portfolio of 5-minute time frame trades. If you want to become very successful monetary wise and reap the rewards of your hard work, then what you will be doing is you will be selling GJ at the top with the however big your stop loss, 300 pips, and you'll be identifying that the economy in Great Britain is absolutely pants, or the economy in the US is really, really strong. And what you want to be doing eventually is holding this trade up here with your 300 pip stop loss, and you want to be riding this down for months. This is where your future is coming from. Every trade in between that on the 5-minute time frame is just going to help top up your money for your portfolio for when you decide to invest into property, and you need to hold that property for X amount of time before you can resell it. And while you're scalping, you're taking buys along this downtrend while you're holding this down. This is where everybody needs to get at. Okay. Now, in order to be able to get to this stage of being able to save money without spending money, to be able to build up your bankroll over a period of time, to be able to invest in other things like ISAs, stocks, shares, wherever you put your money, in order to reap the real benefits and rewards and build that solid future and foundation for yourself, guess what we all need to learn to do? Be patient. And again, I'm not trying to preach a gospel here because I still am trying to learn that myself. So I do understand how hard this is, guys. I really understand how hard this is.
Hey,
But
Max, can I say something? Sorry for
please, yeah, please.
In terms of patience, I just trade 5-minute time frame now. And what I noticed is that if a price, as per your example right now, wants to make that lower high, it's not going to do it at a random time. It's either going to do it in the middle of a 4H close, like at 2 hours in, and not like at the close of a 45-minute candle. So yeah, I just have that in mind all the time, that it's not going to print the pattern at a random time. It's going to be at a major candle closing, or the time has to make sense pretty much.
This is something that I'm going to move on to eventually. But before we move on to that, right? And that's a very good point. And everybody remember that point, okay? What I need everybody to understand and accept right now is that if we expect a result in X amount of time because of the time frame that we're trading, as opposed to trusting the process that the market will go down when it's going to go down and go up when it's going to go up, then we're going to find trading to be one of the most tasking things we can ever do in our lives. It's going to become a burden as opposed to an opportunity to give us our freedom and give us the future that you really want. And I'm not talking monetary value. I'm just talking time, whatever it is you're looking for. We have to learn to accept this. And I'm going to brainwash you lot for as much as I can moving forward from today. I'm going to change my concepts and my approach and my teachings and just accept that if you sell a lower high and the market is down, then guess what, George? It's a good friggin' trade. Now, obviously, there are variations we're going to look at to try and make this work in our favor. But other than that, guys and ladies, we have to accept this. This is the only way we're going to sleep at night when trading. And this is the only way we're going to be able to wake up in the morning feeling confident to come back to our trading. Now, enough of that. Let's move on. Hello?
Can I say something?
Yep.
Yeah. It is really quick. You say that you're